As you all know, we had a Fed decision today, and I think Powell really saved it. It was starting out very, very bad. It was very hawkish. We were all expecting a hawkish move. Powell the other day in comments had basically told us that we were going to have a 50 basis point hike. And sorry, I got my dog Fibonacci decided to come up. He wanted a little attention here. He's always a crowd pleaser. All right, I got to put you down, buddy. I'm sorry. So I think he saved it, Powell, today. There was a hawkish tone. He was basically saying we're doing 50 basis points. We're going to keep doing more 50 basis points. He basically has now promised us at least two more 50 basis point hikes. But what I think the market liked there were a couple of caveats that he added in that I think saved the day today. And one was that they weren't going to do the 75 basis point hikes that Bullard and that guy Leisman seemed to keep wanting to push on TV. And I think that also he said that the risk is actually to do 25 basis point hikes instead of 50, not 75. And I think the market liked that. I also think that there was some fear that they were going to ramp up the balance sheet roll-off. That did not happen. He also had said that they're going to be somewhat data dependent and they're not going to just basically go in lockstep. So let me go through my notes with you and then I'll comment. But that was really, I think, the key here was the no 75 basis points, the balance sheet runoff, and he was still at least giving the soft landing lip service. So here we go. This was the Fed statement. 50 basis point hike. Their target range is now 75 to 1%. And it was a unanimous decision. There were no dissents this time like there were the last, which was, I think, important. They said that June 1st is going to be the balance sheet reduction. It's going to be eventually $47.5 billion average in 3 months and then $95 billion starting in September. And that composition is going to be $30 billion going to $60 billion from the mortgage-backed securities. I'm sorry. That's the treasuries, and then the agencies. No, my mistake. That is the treasuries. It's going to go from 30 to 60, and then the agencies, which are the MBS, mortgage-backed securities, is going to go from 17.5 to 35 billion. So that's your 95 billion. That's pretty big. I remember the days when QE total was like 95 billion. Now it's just, it's like a free-for-all. He keeps saying that the jobs are robust, although we had a pretty crappy ADP number. There were revisions, in fairness, to the prior number higher, but the ADP number wasn't that good. And by the way, we have a non-farm payroll number this Friday. So I guess we're going to go right back into it, with seeing where things go. They didn't mention the expeditious in the papers, and I guess that was like a big thing for the geniuses on TV. But then during the presser, Powell, I think, was playing a drinking game because he mentioned it like every other sentence. So in the presser, he said that inflation is much. First of all, he addressed the American people, which is very weird. I think what was going on there was a political move. He knows that Biden is imploding, that it's a disaster, and he knows that the blame could be placed on him because no one's believing the Putin stuff anymore. And I think Powell wanted to get out in front of it and say, okay, we're aware of the situation. We're doing what we're supposed to be doing. Don't blame us for this. So that's, to me, what Powell was doing there. He wanted to take the blame off of him and the Fed in particular. And inflation is much higher. He then immediately went into the expeditiously to bring it down. Economic activity, he said, had slowed, edged down, he said, and that was due to inventories and foreign export fluctuations. We are running massive deficits in terms of the trade imbalance. President Trump had been trying to get that under control, and they are now they're the worst they've ever been. It just gets worse and worse. People talk about China, but with Japan as well, we have huge trade imbalances there. And until we get that under control, I think we're in for some rough sledding. He talked about supply chain bottlenecks being longer and wider than expected. I mean, He talked about the China lockdowns, and I just talked to my friend, one of them. I have a few friends in China. Given the sensitive nature of China, I'd like to keep them kind of under wraps. I don't want have any of them taken off to some prison penal facility because they speak to me about this stuff. But one of them, I asked her about when they're going to come out of lockdown. There was some talk about May 1st, and now she basically just said they don't know. And apparently they're thinking about doing Beijing now too, which will be unbelievable. I know there's a lot of political dissidents in Shanghai, and I think that was why they hit them as hard and fast as they did. But that's what's going on, and there's no abatement of that. He talked about Russia invasion keeping energy prices high, and it was amazing to me that the market was as strong as it was with oil up $5. That's a pretty big move up, over 100, and I think that was almost like goading Powell to be more hawkish, but he didn't take the bait. I guess Bitcoin trumps oil on Fed days. It used to be years ago, you used to be able to tell what was going to happen with the Fed, or at least market direction, based on where gold and silver prices go. Now it's Bitcoin. So just keep that in mind. Again, he talked about more expeditious business, and he basically shot down. He almost laughed at the media when they mentioned the 75-point hike. And that's really when, if you look at an intraday chart, and I tweeted this out, I said, Powell saved it and the market likes this. As soon as he said that they weren't even talking about 75 basis points, which makes Bullard look like a complete fool, by the way. Like if he was it was almost like, years ago when you were a kid, you'd take your fingers and rub them across someone's neck, to be sun this and that. So Bullard got sunned today, big league. So that's what went on there. And then I think that the market was, really worried about them increasing the runoff past their caps, quote unquote, or increasing the caps was going to be a problem. And so if they're not going past the caps, that means they're still doing some level of reinvestment of the runoff. And that's QE. It's like stealth QE that no one is even talking about, but you're hearing it from this guy. So that's what's going on there. He said that they're going to follow the data, be nimble, and not adding to uncertainty. So this basically, again, took the two fingers and took it across Jim Cramer's back of his neck and said, listen, son, we're not going to come out and do preemptive hikes like Cramer had been calling for to roil and upset the markets. I think that was very foolish of Cramer in the regard, because let's say the Fed did come out and do this emergency rate hike when they had a meeting a week and a half out, which would be really ridiculous. Guys like me would start speculating, okay, they did this emergency rate hike, things are worse than expected. They're not only going to do this hike now, but at the meeting, they're going to do another 50 bips. And that, I think, would have cratered the market. I mean, I don't know what they're thinking. I mean, I would think a guy like Cramer, who's been in the markets for so long, would be a little bit smarter than that, but whatever. I mean, maybe it's a little bit too much, imbibing at his bar that he always talks about. Anyway, the neutral rate is the goal. So this is really where we get into the mud here. He talked about it being a concept, which it is, I guess, because there's no putting your finger on where you raise interest rates to the point where it starts hurting the economy. I mean, I would say that we're already into the neutral rate. If you look at just some of the mortgage data, for example, and I told you I was talking to my pal about this, he said that mortgage applications are flat and the refi business is all but dried up. So I'd say we're really pretty close to that neutral rate. And he said it's anywhere between 2 and 3%. It's been postulated that it's 2.5%. So this was a little bit of a stealth raising of the neutral rate, potentially up to 3%. So that's where I think the Fed is going. I think we're going to 3%. It had been before thought that the Fed was 3.5% was the neutral rate. It came down to 3. It came down to 2.5, and I think Powell is kind of saying he's got room to maybe even to go back up to 3%. And no one's talking about this yet, but for me, that's a little bit concerning if they are going to go that high. But I guess we now know where they're going to stop. Now, here's the nightmare scenario. What happens if inflation doesn't cool down and just keeps on heating up? Will Powell go through the neutral rate? And they've already said that they're prepared to do it. And I think in his comments, I forget what the exact wording was, but he basically said that they wouldn't hesitate to go through the neutral rate. So do we have the neutral rate as like our guidelines as where they'll stop? But what if they don't stop? What if they go to 5, 6, 7, 8? God knows where they'll go. He even gave a cap tip to Paul Volcker, saying he's basically like everyone's hero. So are they going to take interest rates to 17%? I mean, I don't think that's where they're going. I think we're already going to start seeing demand destruction. I actually believe you'll already start seeing it soon in the energy business, in the energy basis. I would think that a lot of companies now are, have employees who are accustomed to working from home. I maybe there's going to be a push saying, hey, we don't have the gas money to do this, and that could be a thing. You also have people now on Zoom doing Zoom meetings and saving a ton of money on airfare, restaurants, hotels, and so on and so forth. I mean, you're taking business trips that could have cost thousands and thousands of dollars and now basically put them out for free. So it's a pretty big change, I think, that we've seen. There'll be some reversion, back. I mean, not everyone is going to do that, and certain people have to go on business trips and have to rekindle those relationships. And we're seeing huge inroads into travel. Expedia is not a well-run company anymore. It used to be for a bunch of years back, like around 2014 or so, but they've lost their way. But based on the booking numbers and the stuff that we've seen out of Airbnb, travel is going well. I know a lot of people think when the economy kind of cools, that's going to cool too. But I don't know. I mean, I read a statistic that 8 in 10 families haven't gone on vacation in 2 years. So I'm thinking that we're going to still see that being robust, and that'll buoy the economy. And I think we may start seeing some bifurcation in the economy with area haves and have-nots. I don't think it's going to be all, bad all the time, but things are certainly slowing. So there's another thing I wanted to cover about Elon Musk and Twitter, which I talked about in my paid video over the weekend, but I did say that I would do a freebie version of that, or a little bit of an update now. So is there any questions on the Fed, or did I button that up well? If you have any questions, just type them and I'll address them here. Just looking at the feed, I'm not seeing any. If it looks good, yeah. All right, so let's transition then. We're transitioning here. Let's go over to Musk and Twitter. So what do I think is really going on with Musk and Twitter? So I think Elon Musk, you'd really to really understand what bond reaction expected. I think it's priced in, a lot of it. I mean, you didn't see a lot of move in the TLT today. I would just say keep an eye on that. If use the Fed day range. That's what I like to do. Good question there. So what I think people can do, traders, you take the S&P and you take the NASDAQ and you look at what their VWAP was today, and you use that, and you use the two extremes, the high and the low. So for the Qs, the VWAP was 321.11, and for SPY, it was 421.51. So anywhere between 422 and 420 must hold on the tape. If we give back more than that, I think we go all the way back down to the lower end of the range, and then maybe if we break today's low of day, I think we got a real problem. Is this the start of a bear market rally? It may be. I think the key for the markets now are to have, let's say, what I would love to see, let's say on Thursday. Today's Wednesday. I just was double checking. I didn't want to make a Biden type of mistake there. The thing. What I would like to see would be a pullback early in the morning or whenever, and then a rebound, and then you use whatever the low of day is tomorrow as an entry for a short or as a stop on longs, and then anything above the Fed day high is a long. If we don't get that pullback and we just keep going, be careful, because we had a pretty rich close today. In the SPY, we were 7.55 above VWAP, and in the Qs, it was almost $8.50 above VWAP. I mean, that's gigantic. I think what you had is a lot of people came in today short. We saw there was a balance of 50-50 bulls bears, and I think the algos early this morning were running stops. You saw that initial pull down in the market, which I think stopped out the longs. It ran it back up over the high of day, and then initially pulled it back. So I think the algos really kind of took it to everyone today. But apparently, I guess the market was more short. And usually what happens on event days, earnings, or Fed days in particular is the VIX doesn't rally through the highs. It pulls back because, like, let's say you bought put protection, you already are in it, presumably, for the event, the big bad event. And once the event is over, there's less demand for it, and then there's the pullback. So you saw, I think once you started to see the volatility index compress, that's really when things went back to the upside there. So intraday, you could use the Fed day VWAP as a buy the dip opportunity if we get a pullback to there. And then if we get below that VWAP, incrementally it's more bearish. Anything below today's low of day, I think we resume the down move, and it could be pretty violent because pretty much every head and shoulder, I mean, every chart is a head and shoulders, like I discussed in my midweek video, and a move back below like 410, for example, in SPY, I think would be catastrophic for the tape. But if we can have a higher low tomorrow, and then clear the high of day from Wednesday, the Fed day high, then I think we do get a rally. Yeah. That to me would be the setup there. It's very simple. And if you want to be really Johnny on the spot tomorrow, use the opening 5-minute candle or opening 15-minute candle, and you could base trades on that as well. So I think that covers the question. I think that's really where you were going with the questions, right? Was that what you meant about like how to trade at post Fed? So that's how to do it. That's how to trade like a boss. All right, any more on that, or are we ready to move on? Yes, no? I'm checking comments here. I'm trying to scroll up. All right, so let's move on. So what do I think Elon Musk is really doing with Twitter? So to answer that question, I think you have to go back to a video. I'd have to check the date, but it covered Steve Wynn. And I think Steve Wynn realized that there was a turning point in the market coming, and he used the Me Too movement to get out of his Wynn shares. It's sort of like the hunt for Red October, right? Remember, how do you get a crew to want to get off a nuclear submarine? So I think Steve Wynn cleverly, used this Me Too issue to sell his shares without the market batting an eye. If anything, it was seen as a positive for the stock, like get this toxic guy whose name is on the building, by the way, the genius who created this, out of the company. I think he knew there was no way to get out without hurting the stock. And I think Elon Musk is doing the same thing here. I think he realizes that Tesla is high, really high. And there's no way for him to sell stock or get out of it without, triggering the, further sellers into emboldened shorts. So I think he realized he likes Twitter. He wants to make it a free speech, atmosphere. And I do think that that's part of his motivation, but I also think it's a way for him to get money out of his Tesla shares and to diversify himself into, let's say, another asset like a Twitter that he could ultimately sell again or maybe bring public again at some point. But I think that's what's going on there. And I also think it could be potentially for a further business expansion. I think Musk is thinking a little bit further out. He's got this great manufacturing capacity to build these cars. He's got, expertise in lithium. If you ever have been in a Tesla, they have basically like a big iPad that runs the whole car. So would it be such a stretch for Elon Musk to then start making smartphones, Tesla smartphones? How cool would that be, right? Who wouldn't want a Tesla smartphone? It's a luxury brand. So I think if he did that, he could then take Twitter and make it like the built-in messaging app for the, like Apple has iMessage. I don't really know what Google has. I don't really use Android all that often. But I think that he could use Twitter as like that built-in, so you'd have social and messaging built in. They could make some big adjustments to the app, and I think that's where he could be going. He'd have lithium, and then here's the other thing: he has Starlink. Yes, very good. You front ran me to that. He has this other product that they built called Starlink, and you could connect the phones via satellite to their system. So I think Musk could be creating like his own ecosystem, his own tech ecosystem, and maybe this was like an opening salvo to that expansion. So that's my thinking on Tesla. I haven't heard anyone else really discuss this. Maybe in some small capacity, but not nowhere nearly as comprehensive as what we've gone over here. Conspiracy between Elon Musk and China? No, I don't think so. I think he knows, he's got to build in China and sell in China, but I don't think there's any conspiracy with Elon and the CCP. I'd be very surprised. I don't necessarily like the Neuralink stuff. I think that's a little kind of crazy, but, this is how it goes. Fun fact about Musk, by the way, he, when he was building SpaceX, he couldn't get good engineers to build the rockets, and he became the rocket designer, and it took him 4 tries with, basically just a physics background to get a successful launch. So I think, for him, if he can build a rocket, I think he could build a pretty good smartphone. And he's been, I think, on record, someone said he, thinks that the iPhone is a little antiquated or whatnot. So maybe there's some real competition coming to that, ecosystem. Maybe there's a Tesla ecosystem coming soon, too. And that would be something. So I think we'll wrap it there. I covered a lot of stuff. I'm going to do another broadcast. These days, it's always so tiring because I have to talk so much. But I'm going to do the chart version of the video where I go over the charts. If you want to watch that, it'll be available a little bit later. And I go through all the charts. I do the FANG names. I do the major market indices. And we talk about, trigger levels and trade setups there. So that will be up in a few hours. Anyhow, have a great rest of your week. I will see some of you for the weekend videos, subscribers. And if you're not a video subscriber, by the way, I haven't publicized it, but I am extending my free month trial. So if you want to use the link in my bio, it'll take you, the promo code is free. It should automatically come up. But you could try my video service free for a month if you want to check out my the big boy videos, so to speak. Big boy and big girl videos. I saw the big girl was watching this video, by the way. Yes, she was in here. Anyhow, I'll catch you guys on the flip side. Cheers.